Financial reporting. So first of all, let me give you an introduction regarding the syllabus which we are going to cover in this paper. And most of you guys have already uh, covered the basics of this financial reporting paper in your F3 or in introduction to accounting paper. So first of all, I'm going to introduce basic few topics which will be covered in this paper, and after that we will cover the paper pattern and so on. So I'm going to give you an introduction of the syllabus first of all. Okay, so students, I'm going to start with a very basic term which is called resource, or we can start it from expenditure. Students, what is expenditure? Expenditures are your outflows of your money. So any outflow of money is called expenditure. So there are two types of expenditures. There are two types of expenditures. One is revenue expenditure. You're all familiar with this term. There are two types of expenditures. One is called revenue expenditure, and second one is called capital expenditure. all the revenue expenditures, all the revenue expenditures are recorded as an expense. And all the capital expenditures are recorded as an asset. And as you all know, there are different types of the assets. For example, current assets, and non-current assets. So we first of all, we will cover what is expenditure, then we will split these expenditures into revenue and capital expenditures, and capital expenditures are called your assets, and then assets will be classified into current and non-current assets, and then we will split these categories. After that, we will cover the current assets in detail. For example, there are different types of current assets. One is inventory. We will cover the topic of inventory, and after that, we will cover financial instruments as well, just like receivables, financial instruments. So, financial instruments contains financial assets as well as financial liabilities. And apart from financial assets and financial liabilities, financial instruments also contains equity instrument as well. So, anyways, we will cover current assets in the topic of financial instruments as well. After that, we will move towards non-current assets. After that, we will move towards non-current assets, and we need to consider whether a non-current asset will be for investment purpose, whether we have purchased the non-current assets only for the investment purpose, or we have purchased the non-current asset for business use. So these are two different types, these are two different categories of the non-current assets: business use non-current assets and investment purpose non-current assets. And what do you mean by no investment purpose? Any asset which we have purchased with the intention to resell in the future, or for the capital appreciation. Any asset we have which we have purchased for the purpose of capital appreciation, or we have purchased an asset for rental purpose, it is called investment purpose. So rental or capital appreciation. So these are the investment purposes. If we have purchased an asset to earn rentals or for the capital appreciation, we will keep this asset for a while. Capital appreciation, capital improvement. So we will keep this asset for a while, and we are going to sell this asset at a premium price, at profit. So it is called investment purpose. On the other hand, if we have purchased a non-current asset for business use purpose, so those assets which are purchased for the business use purpose, there are further classifications of these assets. For example, maybe these business use assets are tangible assets. Maybe these business use assets are intangible assets. Tangible business use non-current assets are called property, plant, and equipment. So we will cover what is property, plant, and equipment. So for the time being, I'm just want to give you a basic idea, that is, any non-current asset which is tangible and held for use in the business is called property, plant, and equipment. On the other hand, maybe there are few intangible non-current assets held for use in business. So these are called intangible non-current assets. And in both these cases, sometimes there is a sudden decrease in the value of an asset. For example, maybe the technology has outdated. Maybe there is a damage. So due to certain reasons, maybe there are chances that there will be sudden decrease in the value of an asset. That sudden decrease is called impairment loss. So we are going to cover all these topics in our F7 or financial reporting syllabus. So impairment loss, we are going to cover the impairment loss. What is impairment loss? What is the definition of impairment loss? But for the time being, what is impairment loss? Sudden decrease in the value of an asset is called impairment loss. After that, we will move towards liability section. So there are different types of liabilities. There are different types of liabilities. In current, there may be current liabilities, may be non-current liabilities. There may be provisions. So there are different types of liabilities. Provisions are expected liabilities whose chances are more than 50%. So if there is any expected outflow and the chances are more than 50%, we should record that outflow as a liability, and that is called provision liability. So there are different types of liabilities as well. And the last section is equity section. Liability towards shareholders. So anything which we need to owe to shareholders is called equity section, and we will cover the equity section in financial instruments and other topics as well. After that, we will cover incomes. And after covering all these items, we will have final accounts or final financial statements. Because these are the basic components to prepare the financial statements. So after covering expenses, assets, liabilities, incomes, and capital, we can prepare the final financial statements. So the basic final financial statements are P&L and statement of financial position. Normally, there are 5 legally required financial statements, but normally in F7 examination, your examiner normally tests P&L, profit and loss, and statement of financial position. We will also interested to calculate cash flow statement. Companies are interested to calculate the cash inflows and cash outflows during the year. So we will prepare cash flow statement in order to calculate the money received and money paid during the year. So what is the net cash inflow or net cash outflow during the year? After that, we will move towards the group accounts. If there are more than one companies within a group, how to prepare the financial statements, consolidation. We will move towards the consolidation, also called group accounts. So if there are more than one companies within the group and one company has purchased the other company, so we will prepare individual financial statements for the every company, and we need to prepare the combined financial statements for the whole group as well. So the combined financial statements for the whole group is called consolidated financial statements. So we need to prepare the consolidated financial statements as well. And after that, we will cover a chapter of interpretation. So interpretation means explanations. So we will explain the financial statements with the help of different tools, maybe ratio analysis, maybe due to different comparisons. So we will interpret, we will comment, we will give explanations on the financial statements. So in this way, we will be able to cover the syllabus of financial reporting. So we will use smart notes for the syllabus coverage, and apart from smart notes, you guys will be using Kaplan book as well. So book reading is very important for this paper. Book reading is very important for this paper. Our smart notes are very concise and comprehensive. But unfortunately, they do not contain any examples or test understandings. So to have a better understanding, to have a better grip on these topics, you must need to practice few examples on every topic. So that's why you will use books. So for example, this is the contents of your syllabus. Introduction to published accounts. Introduction to published account means financial statements. So first of all, there will be an introduction about basic financial statements. For example, what are the elements, what are the components which P&L will contain, what are the components which statement of financial position will cover. So after that, we will start from chapter number 2. We will start our syllabus, our lectures from chapter number 2. So, tangible non current assets means property, plant, and equipment, IS 16. You're already familiar with the standard, IAS 16. So, first of all, we will cover chapter number 2. We will cover tangible non-current assets held for use in business. After that, we will move towards intangible non-current assets. And after that, we will cover impairment losses as well, how to deal with the sudden decrease in value of an asset. Then non-current assets held for sale. Non-current assets held for sale means those assets which we have declared that we will not use these assets in our business, and we are going to sell these non-current assets. After that, we will cover framework, conceptual framework. What are the basic concepts? What are the fundamental concepts of the accounting? So these two chapters will cover conceptual frameworks and regulatory framework as well. There are a few other standards just like IS2, maybe provisions, and we will cover leases. Sometimes it's not possible to purchase a non-current asset straight away, so uh, we will lease a non-current asset. So what are the accountings for lease agreements we will cover in this chapter. Financial assets and financial liabilities. This is new chapter. You have not covered this chapter in your earlier studies. Obviously, we are going to cover what is financial asset, what is financial liability, and what are the accounting implications. Foreign currency. If you have purchased or sold anything in the foreign currency other than pounds, then what are the accounting implications? How to calculate exchange gain or loss? After that, we will cover the incomes or revenue. If you are going to sell anything, how to record the revenue, when to record the revenue. If you are going to sell anything and you are offering discounts, how to record these discounts. Then, obviously, taxation. Once you are able to calculate the profit or loss of the company, then obviously you need to calculate the tax as well. How to calculate the tax? How to record the tax, and most importantly, there is a term called deferred tax. So, what is deferred tax? What are the accounting implications of deferred tax? We will cover all these things in this chapter. Earning per share. So, students, e- every investor want to know the return on his investment. If you are going to invest your money anywhere, for example, if you want to invest your money in property, if you want to invest your money in the stock, if you want to invest your money in shares, obviously, first of all, you will be interested to know the return on your investment. So, EPS means earning per share. So, this is a measure for the investors. So this measure will express the money which investors are earning on per share investment. After that, we will cover IS 37 and IS 10. Obviously, we will cover different provisions. I have already given basic introduction of the provisions. Provisions are basically expected liabilities. So any outflow whose chances are more than 50%, that is called provision. So we will cover the detailed implication of the provisions in this chapter. And after that, there are few chapters on the consolidation. Chapter number 16, 17, 18, 19, and 20. So we will cover group accounts in all these chapters. And at the end of our syllabus, we have two chapters regarding interpretation and cash flows. So in this way, we will be able to cover our syllabus. So these are the different topics which we will cover in financial reporting paper. So if we will move towards the paper pattern once again, so what is the paper pattern? So since obviously your paper consists of 100 marks, you are going to attempt 100 marks paper, and there are three parts. In the part 1, there will be 15 MCQs. There will be 15 MCQs, 2 marks each, so 30 marks in total. In the part B of your syllabus, students, you will be given 3 scenarios. And from every scenario, there will be 5 MCQs. So means 15 MCQs in total. 2 marks each, so once again section B will consist of 30 marks. And when we will move towards the part C of your syllabus, so in the part C of your exams, you have 2 long questions, 20 marks each. So these questions will be on interpretation or final accounts, means P&L or statement of financial position, or on the consolidation. So this is your paper pattern. So long questions will cover 40 marks in your exams. As far as syllabus coverage is concerned, first of all, students, we will cover few standards. First of all, we will focus on covering the standards. And with every standard, we will practice section A from the kit. For example, if we have covered IS 16, we will try to practice all the questions from the kit on IAS 16. And most probably those questions will be MCQs or MTQs. Means these questions will cover section A or section B of your exams. So first of all, we will cover standards on individual basis. So once we are able to cover the final accounts, we will be able to prepare the financial statements. Then we will move towards the practice of financial statements. So we will start with covering the covering of standards. After that, we will cover few questions on financial statements, also called final accounts. And one most important thing over here I am going to mention is almost 60% of your exam is MCQs based. In order to solve this 60% portion, students, please concentrate on examples and test understandings from your Kaplan book. I'm repeating once again, book reading is very, very important in this paper. So, in order to grasp these 60 marks, you need to use Kaplan book, and you should practice examples and test your understandings from your Kaplan book. So after in every class, we will try to cover a standard. So in every class, we will be cover a standard, and you need to practice all the examples and test understandings from the Kaplan book on that topic. So this is very, very important. So first of all, we will cover different standards, and in the class we will cover kit questions, while practice of examples and test understandings from your Kaplan book will be your assignment. So once we are done with the standards, then we will move towards the financial statements. After that we will move towards consolidation. So we will cover group accounts, and obviously it will be a major portion of our syllabus. After that, we will move towards cash flow questions. And finally, we will cover interpretation. So in this way, we will be able to cover our whole syllabus, and we will cover the Kaplan book as well. So as far as study material is concerned, we will use Kaplan study material along with our smart notes. We will use Kaplan book. We will use Kaplan kit. And we will use smart notes. So these smart notes are very concise, very comprehensive. Obviously, we will use these smart notes to cover the theoretical portion, and obviously, we will use Kaplan book for the examples and test understanding. So that's all regarding the introduction of this paper.